We are starting with John in Calgary. Go ahead, John.
Yes, good morning. TELUS is coming out with their earnings tomorrow. And do you think they'll do just as well as BCE did in the cellular division? And do you have a target on the stock? And do you consider this a buy, sell, or hold? Thank you.
Great. So, John, this is a company that we've talked about many times over the last 3-4 years and would be in our top 5 holdings in the firm. It is really the poster child for what's worked in this market over the last 3 years, and that is companies with a sustainable yield, but one that grows over time. So Darren Entwistle said 3 years ago, we will raise our dividend twice a year for the next 3 years. It's exactly what they've been doing, and shareholders right now in this kind of market really like predictability, and they're paying for it. Now, when you look at the company, they're paying out less of their earnings today than they were 3 years ago. And so I think it's highly likely you're going to continue to see them boost their dividends steadily. The mobile business is a good business. And I think that when you're looking at trying to make money in stocks right now, it's about return with a risk characteristic you can live with. And there is very significant demand for yield out there, as we know. Fixed income, not a good alternative. So we like TELUS. We think that you're likely to keep getting dividend growth. You're getting basically a 4% yield and one that will continue to grow. I think this should be a core holding in really any portfolio.
And have you chosen this one over BCE and or Rogers?
We actually own all 3.
Oh, you do? Okay.
This sector, I think, has the right characteristics for this market. It's one of the areas that we're focused in. But if you look at these dividend growth stocks, they've had roughly a third of the volatility of the stock market with all of the return. So we know there's people waiting underneath the surface just for their chance to buy it on a pullback because there's lots of folks looking for this kind of characteristic. I think that this whole group is one that you can continue to own, among other sectors.
And as a reminder, BNN is a division of Bell Media, which is owned by BCE. Let's talk to Lynn, who's in Toronto. Go ahead.
Hi, David. When you were on a few months ago, you talked about biotech and in particular Amgen because it's not facing some of the patent cliffs of the traditional pharma. And in terms of other growth sectors, you also talked about cellular towers. Both have appreciated. Given where we are today, do you still like Amgen? And if you could only go into one space, where would you be?
Well, certainly we continue to like pharma. If you looked at, say, the pharma ETF, either PJP or PPH, they both have been very strong performers and are trading really around the top end of their bands. I think that they have the right kind of characteristics. So we like that group. It's not going to be the very strongest group in the market, but from a risk-adjusted standpoint, I think it looks pretty good given this environment. Think about this. There's 2 things that drive share prices. You got earnings growth, and then you've got easy monetary policy forcing people to move out the risk curve to try and get a return. Earnings growth is still pretty hard to come by in general. You know, earnings estimates continue to get ratcheted down, and GDP growth around the world not particularly strong. So I think you want to focus in groups that have a high likelihood of continued growth, and it probably Amgen will grow their earnings 10 to 15% a year for the next couple of years. You get a 2.2% dividend yield. I'd prefer to focus here. In the tower companies, I like them still, but they're probably becoming a little bit higher priced in the short run, and there might be better spaces.
Okay, let's expand on the tower companies. The previous caller asked about some of them, and Natalie has a specific question here out of Toronto. Hi, Natalie.
Hi, thank you for taking my call.
You're welcome.
I purchased American Tower at $79.50 just about 10 days ago, and it's gone down by about 7%, and I just wanted to get some either reassurance or recommendation from you, whether to hold it or to sell or whatever you think. Thank you so much.
Natalie, if you look at this group, the tower REITs have had several short-term pullbacks over the last 3-4 years of anywhere from 7 to 10%. I think that that's natural. I think that when you look at what's going on in the market right now, you've seen some money rotate to things like industrial machinery because there's a little bit more reinvestment going on. But this continues to be a theme that's going to continue to play out. 2012 estimate was for like 70% growth in earnings. You see about 30% growth in 2013. They're generating lots of cash. I think that probably this little pullback is not a bad opportunity to buy it. It's not going to be the strongest part of the market as the market continues to rally, but I think risk adjusted it looks pretty good. Probably there's very good support in and around $70 or a little bit above that, so you're not far above that now. I think it'd be just fine.
Right, and that 200-day is at $72 or so. And do you hold American Tower?
We do own some American Tower. We also own SBAC, which is a competitor.
All right, let's talk to Peter now. He's in Oakville, Ontario. Hi, Peter.
Hi, thanks for taking my call.
You're welcome.
I would appreciate your guest's comment on Pengrowth. Now, Pengrowth used to be $25 a number of years ago. I bought it for just over 10. Now it's $4.50 or $60. Where do you see this company going? Will it be affected by the Keystone Pipeline? Will that be a positive if that goes through? And what do you think will happen in May when usually the oil stocks are sold? So I would appreciate your answer to these questions. Thank you.
So let me just start out from a process standpoint. We look at things asset class first, which we're okay on equity asset class. We look at sector second. Energy as a group has been underperforming, especially the producers in Canada and the US, frankly, because of the very low prices we're actually getting for our energy in Western Canada because of the discount to WTI. Pengrowth has had basically falling revenues and earnings are basically flat to negative. So they're not covering off their distribution. Share prices continue to peter out. From a philosophical standpoint, you want to own the strong securities within a group, not the weak ones. So we're never going to be the ones to try and pick a turnaround. This has been steadily falling for a long time. I think that there's better places to be. I would cut your losses and move on.
And specifically, we're just going to take a break here, but you prefer energy infrastructure, and you'll talk more about that later with some of your past picks.
Yeah, energy infrastructure has pricing power. A lot of the producers are having a tough time.
Mm-hmm. Okay, David, a short pause here. We'll get back to questions for you on North American large caps after this.